Trading, speculation, investing. Discover the most powerful techniques to generate profit in bull and bear markets. Hear from the most successful traders in the world. This Trader's Perspective podcast is brought to you by BBOD, the largest non-custodial crypto derivatives exchange worldwide. Go to bbod.io and start your journey to financial freedom.
Hello everybody, welcome to another BBOD talk. This is another edition of the Trader's Perspective. Today I am with Scott Melker, who is a veteran trader with over 20 years of experience investing in legacy markets. He has been featured in Bloomberg, the New York Times, the Wall Street Journal, and Coindesk, among others. He is also a world-renowned DJ and music producer. Hello Scott, welcome to BBOD Talk. It's a pleasure to have you here.
Thank you so much for having me.
Well, thank you for being here. So let's go straight to the first question. Can you tell us a little bit about yourself and your background in trading?
Yes, absolutely. So I first was interested in investing when I was a kid. I remember being young and my parents sort of teaching me a bit about stocks. And of course, this is when you had to have a stockbroker and they would send you the physical certificate when you bought a stock. It was very different back then. So the first stock that I ever bought was Caterpillar, the tractors, just because I thought tractors were cool. And the second one I ever bought was Disney. And then when I went to college, I went to the University of Pennsylvania. And it was hard in the late 90s to ignore the influence of Wall Street and finance when you're at the University of Pennsylvania. It was sort of during the big banking boom, and they were giving away jobs like chocolate at Penn because of the Wharton School. So of course everybody caught the finance bug there a bit, and that's where, in taking a few classes at the Wharton School, I first was introduced to technical analysis and charting, and generally just economics, macro, micro, and other, sort of all-encompassing business ideas. I chose at that point not to pursue a job on Wall Street, even though I had a job offer at Solomon Smith Barney, and chose to start a company with some friends. We started an internet company, and that was something I sort of jumped back and forth with all these small businesses, but then decided to focus on my music, which was something that I had always done since I was little, and sort of had my DJ career take off and focused on that for basically the last 20 years until a few years ago.
That's a lot.
But being a DJ and a music producer gives you a lot of downtime. So, when you're traveling or you're playing at night, you wake up in the morning and, I don't have to go to work till 10 p.m. again, and that leaves a lot of time for trading. So something I sort of always did, for better or for worse, because I learned a lot of hard lessons when I was younger, and, I went through obviously the crash in 2008 and 2009 and the recession and all of that, and the internet boom as well. So, something I always did, and then I was more of an investor, I would say, than a trader. I've never been that aggressive with trading. I've gone through phases where I did day trade or do some swing trading, but just not for me. It's a little too intense, and I found it not to be as profitable as moving slowly and trading. So I finally got into crypto around the end of 2016. I'd been trading Forex and obviously stocks for years and years and years before that. And I caught the bug like everyone else because, the market was booming. It was really at the bottom, and to some degree got lucky. I mean, I'm very good at it, but anyone who was there at that time and had the presence of mind to not dump all their money into the market, and lose it. If you were just kind of slow and invested in the right things, you made a ton of money, and I was lucky to have exited with some of that at the end of the boom, and I've really started moving back in heavily, over the last 6 or 7 months.
Yeah, well, so you learned from the hard lessons, both in shares and the crypto market.
Yes, there's one thing that they always joke that there's two kinds of traders. There's humble traders and traders that will be humbled. And I was first number 2, and then I became number 1. So,
well, that's right. You learned the lesson.
Yeah, learned the hard way many times. So,
so let's go straight to a trading question. So, what is your main trading strategy, and what kind of tools do you use to analyze the market?
I think like most traders, you try everything at first. So if you're in it long enough, you've done support and resistance, supply and demand, every indicator, TD sequential, RSI, OBV. You've drawn patterns on charts. You've literally tried everything. Ichimoku clouds. I've been every kind of trader you can imagine at some point. And it keeps it fresh. You do this for 6 months, you do that for 6 months. At the end of the day, I think that I would say I'm primarily a swing trader and investor. And for actually analyzing markets, I prefer price action. So really just watching the candles and how price action develops. The only indicator I really use at this point after trying all of them is the relative strength index, the RSI. And I use that just for looking for divergences with price and overbought and oversold. But generally, I think that the longer you trade, you look at a chart and all you want to do is identify areas of liquidity, find places that the big players, the whales, the composite operators, where they're looking to sell and where they're looking to buy, and not try to fight against the tide. I mean, at the end of the day, you want to be on their side and not going against them. So I think that most advanced traders, they look at a chart and they say, where are these guys buying? Where are these guys selling? And how are they going to inflict as much pain on everybody else as they can in doing that? How are they going to move small money into their pockets and make sure that everybody in their path goes broke? It's sad, but I think that, at the end of the day, when you look at a chart, all you're really looking at is a visualization of human emotion. Like, it's fear and it's greed. That's why fear and greed indexes work so well. When everybody's scared, you should probably be buying, which is counterintuitive. And when everybody's being really greedy, like at the end of 2017 with crypto, it's time to start selling. And the big players, they know that. So you're just basically looking for a chart. It's a representation of that to find those entries and exits.
Well, that's a hard part, right? Because sell when everybody's buying or buy when everybody's selling. It's like the trading psychology that always plays the traders.
Absolutely. And another lesson that's hard learned for most traders is to be able to eliminate emotion completely, and to just look at something objectively, to be able to step back and not think about the money that you're using, but just to think about what's likely to happen and how you can take advantage of that. Because when you tie the money, especially if it's more than you can really afford to lose, which is the biggest thing I think that, biggest mistake that traders make, if you're emotionally attached to your money, then you're going to make bad decisions. And that's just the way it is. And poker players describe it the same way. I remember Doyle Brunson in Super System wrote about viewing your chips not as money, but as units, so that you would detach yourself emotionally from the money that you were doing, so that when you knew that the odds said to push all of your money in, you wouldn't be afraid to do it because you didn't view it as money that you were about to lose. So similar concept.
Talking about the mistakes particularly, so if you should tell us what are the most common mistakes that traders make and what do you recommend to avoid these mistakes?
That could be quite literally a 2-hour conversation. There's so many mistakes. That's an interview in itself. Let's make a summary. But to give you the most basic ones, I just touched on the first, which is rule number 1 of trading, which is never risk more than you can afford to lose. Because that will attach it emotionally and it will cause major problems in your life beyond your trading. And you never want your job, if it is trading, to influence the other parts of your life. So basically, whether you're a millionaire and you can afford to lose $1 million, or if you have 100 total dollars, you can only afford to lose 10, don't risk more than $10. It's just the way it is. I would say that after that are the, sort of the other tenets of trading is that the number 1 rule is to protect your capital. And number 2 is to grow it. And I think that that's something that most people don't realize. They come into investing thinking they can get rich quick or they're going to make a ton of money, and they lose everything before they have the chance because they don't practice proper risk management and they don't protect the money that they have in the market. And I think, that's a big problem, especially in crypto, because it's such a unique environment versus legacy markets. We have social media influencing the decisions of new traders in crypto, which is something that never really sort of existed before. So a lot of people with basically no experience, no knowledge of charts, just go on Twitter and they say, oh, this guy's buying, selling, I gotta do it. They catch on to the FOMO and they just do what someone else is doing, and more than likely that person is manipulating them into buying something that they're actually selling and not buying. So I think you have to have a basic knowledge of investing, charting, to even put real money in. So to avoid the problems, first, take some courses, paper trade. You can paper trade right in TradingView. Don't use real money. See how you do. Gauge your performance, and do it without your actual money that you're going to lose, because then you may be ready to do it. At the end of the day, people just almost consistently give their money away. It's almost a guarantee. The statistics on trading are astounding. I think it's like 80% of people who attempt trading or completely fail in 2 years. I think only 7% are left after 5 years. And those who trade for 10 years generally have lost money and just are too stubborn to admit that they're not good at it and continue to do it. Even investors underperform the market. If you were to buy, say, like an index fund that just tracks the success of the stock market, and this is more specifically about legacy markets, I believe generally investors lose about 1.5% versus the market. So they're underperforming the market by 1.5%, but traders, it's like astounding. It's like 7%, 6.5%, 7%. They do worse than literally if they just bought, the SPY or something that's tracking the market and just let it run and do nothing. So, and I think in crypto, that's even more obvious, because almost everybody who's attempting to trade altcoins or leverage or all these things, if they had just bought Bitcoin, they'd have been better off and done nothing. So it's like you're spinning your wheels and putting in all this effort just to lose your money, which is never really a good idea. So I would say also there's a few things. There's a big difference between investing and trading. I think for someone who's new, you have to have another job. You can't just say, I'm going to be a full-time trader and I'm going to make money. It just doesn't work that way. Because first of all, they're all undercapitalized. To be a full-time trader, you have to consider paying every bill, paying your rent, paying for your car, paying for your children, all with your trading. So all these people who think they're professional traders but aren't ever selling, you're just investing and moving money around. You're not trading. If you're trading for a living, that means you have to pay all of your bills by trading. That's a very difficult thing to do because most people are afraid to sell. We talk about like I think that's one of the biggest mistakes, is that people fall in love, with their investments. They fall in love with these coins, they fall in love with Bitcoin, and they never sell any. Well, you're not making money unless you actually cash out. That's just a fact of life. And that's why we saw so many people become paper millionaires in 2017 and I'm so rich, and then they watched it all go away in 2018 and never were able to actually, realize those gains. So I think, a refusal to sell is a huge issue for new traders, because they just, they're afraid they're going to miss out on more gains. They didn't get the top, they didn't get the bottom, all these things. Another huge mistake that I've definitely been guilty of, and I think most traders, is that when you decide you're a trader, you feel like you always have to be in the market. You always have to be trading. So you overtrade and you're always looking for something, and you analyze and you take more trades than you ever should, which is just, the fact is, the more you trade, the more likely you are to lose. You're giving yourself more opportunities to lose your money. So, if you're just over trading and trading like crazy, you're pushing too hard. And that's the biggest problem I see for beginners in crypto, I think, is the worst part about this market is that it's 24/7. It never stops. And you cannot track a market every hour of your life. It's just impossible. You have to sleep, you have to eat, you have to take care of your kids, you have to take care of your responsibilities. And so the beauty of being a trader in the stock market is, it's open for a few hours a day and it's closed on the weekend. You don't even have to think about it. You can prepare. And I think coming from that, I never got caught up in the I can't tell you the last time I couldn't go to sleep because I was worried about a trade, or I woke up in the middle of the night to check something. It's just not my nature. I'm not thinking about it. I'm spending time with my family and I'm sleeping. And I think for a new trader in this market, it's just so hard not to get caught up in thinking that it's something you have to do all the time. The reality is, the slower you move, the slower you take trades, the more you average into those trades, the better you're going to do. And so
I guess it's difficult to go step by step when you're so excited about trading crypto, because as you said, many people fall in love and they they really like the idea that it's 24/7, but it's a double-sized weapon because you're just to be there, and as you said, you need to be there, and it's very risky. You need to handle that. So.
And I think the majority of people who are invested in crypto or view themselves as traders have almost all of their money in the market. I think it's just the nature of people who are into this kind of thing. They put it all in there and they're hoping to get rich, and that's a lottery ticket. Very rarely works. There will be people who get rich, but 99% of people who are trying to trade this market are going to lose everything, if not lose their interest before they lose everything, but it's just not a job for most people. And like, I would have never been able to trade unless I had made money elsewhere to have enough money to actually trade and make a living. You can't start from zero and be a professional trader because you need all of that capital to trade. You can't use it for your life. So it just doesn't, it literally doesn't make any sense. You cannot do it.
Well, the good thing about the mistakes is that you always learn your lesson, but you should pay attention and learn it, because otherwise it will be just a sad ending. But and speaking about risk and mistakes, can you tell us the riskiest trade you ever made and what was the outcome?
I wish I didn't have to, but we learn from our mistakes. I don't know that, riskiest is hard to quantify. I can definitely tell you the worst. It was probably about 10 years ago. A company that I had a friend whose father was consulting for a pharmaceutical company. They were called Eric's Therapeutics. Never forget that name. I'll probably be saying it on my deathbed on my way out. So they were changing the world with a new medication they had developed, and they were imminently getting FDA approval, and this was, the information that we had, and they were being run by this genius CEO. So I put in way more money relative to my portfolio size than I ever should have, because I thought it was a guaranteed, just like crypto people, I was just going to get so rich. I knew what was going to happen. And weeks later, they had an earnings call, and the CEO, I've mentally blocked his words. I can't remember exactly what he said, but he basically said, I don't know if the FDA is going to approve us. Oh, and also we're going to run out of money, and our investors aren't interested. So I believe it was $6 or $7 a share when I bought it. It instantly went to $1, and a month later, the company was out of business. The stock was delisted, and I went from full investment to exactly $0. So it was a full loss. I never considered having a stop loss or selling it when it was going down, because I thought I had information that it was going to go up, and I lost quite literally everything that I had on that investment. So from quite a lot to zero in less than a few months. And the worst part is that there was other friends and family and stuff. Everybody went broke together. So it was not an ideal situation. And I didn't trade actually for quite a while after that, because A, I felt again that I was undercapitalized, and B, I just wasn't, in the state of mind to start throwing money back into the market. This was also kind of during the recession. It was just a very rough time for markets, and to have something like that happen on top of it, compounding the misery was not great.
Well, that was a big lesson, I guess.
Yeah, I've recovered from it. Took a long time,
Yeah. So I want to ask you, how do you quantify your risk?
First of all, risk management is literally everything. Quantifying risk for a trader and understanding risk, and that's not just the most simple catchphrases. Don't bet, don't risk more than 1% of your portfolio on any single trade. Okay, basic risk management. That's smart, it's important, but really understanding risk is the whole game. We talked earlier about how, what kind of trader am I, what's my style? It's honestly irrelevant. People use Elliott waves, they use this, they use that. Everybody has a way to find their entries and their exits, right? I don't care if you're reading tea leaves or you go to a tarot card reader and they tell you when to buy a stock. Doesn't matter. All that matters is protecting your capital and managing your risk. So for me, I can tell you that I've learned to kind of have a balanced portfolio that I treat in a very specific manner. And something I learned very young is that 70% of your investments should be long-term holds. You should be roughly 15% in cash so that you can buy the dip or take advantage of any opportunity. And you should not be trading with more than 15% of your entire portfolio. I think in crypto, people are trading with 100% of their portfolio. They don't have 70% put away. So that 70%, if you're speaking specifically about crypto, it's basically 70% in Bitcoin. Or if there's something you truly believe in that you're willing to not look at for years, you can put that. But I view a long-term hold in the same way I view like a retirement account, which is something that I check the balance of quarterly. Most people are checking their crypto portfolio on Blockfolio. They're reloading every 5 minutes.
Yes.
If it's truly the long-term hold part, you should only have to check it a few times a year. Literally, yearly, And so I think that that's a huge part of managing risk, is to realize that you should only be trading on a regular basis. Even for me, trading can be over months or even a year for a trade. It can also be a day if I identify something and happen to see it, but that's only 15% of my portfolio. Now, back that up, I personally, for my risk, would only be willing to have 10% of my entire portfolio, considering if we're talking real estate, stocks, bonds, everything, in crypto. So 10% of what I have is the most I will risk in crypto, and only 15% of that is the most I will risk trading, and I'm a professional trader. So,
good advice.
So that talks to how, when I say people are undercapitalized, you should not, if you have only $1,000 to invest, I would say don't touch crypto, personally. People think I'm crazy. They think I'm like the enemy or something when I say that, because they think that Bitcoin will change the world. Maybe buy $100 worth of Bitcoin and put the other 90% into a IRA, some sort of investment account for your retirement, more secure. Crypto is extremely risky. I don't care what anyone says. And if people say it's gonna, the world's gonna collapse. First of all, if you're counting on the world economy to collapse so that your Bitcoin is worth money, we have much bigger problems, because I don't want to live in like a Mad Max society where we're all driving around in the desert trying to find food and our Bitcoin is the only thing saving us. Is not the reality that I'm trying to exist in. But, I think that you should be putting primarily most of your money in safer assets. And if the world risks off and there's a global recession, I don't see people running to a riskier asset like Bitcoin to store their money. That narrative just does not work for me. It's never happened in the past. People don't go, I'm losing my dollars, I need to go buy something riskier that changes 10% a day. Just doesn't really work for me. I believe in Bitcoin, I really do, and I love that it's deflationary. I love its use case. I have friends in Venezuela who literally survive, on Bitcoin. And I think that that's incredible, but I don't think that means that you should have all of your money in it or a majority. So I think that to get to the point where you can be a trader, you have to have managed your risk so well that you could lose everything. If crypto literally all went to zero, I would be fine. And that's the only way I'm comfortable being in it. I would not be in it if my family's future was at risk, my kids' college fund or private school tuition or whatever. None of that can be at risk for me trading. It's different for a 21-year-old kid who, I've made terrible decisions through the years, as you've heard, and I've lost everything a few times. That's not a major risk when you don't have a family or if you're on your own, you know what I mean? But when you become an adult, if you want this to be your job that sustains you, you have to have enough money to do it, and you have to have, so little on the line that it wouldn't hurt you if you fail. Because like I said, almost all traders fail. But if that's my macro risk strategy, that's how I view all of my wealth, basically. But if you want to talk about how to manage risk on a trade or as a trader, well, I'll say first that crypto exchanges make it extremely difficult. It's like trading crypto is like being in the Stone Ages. You can either put a stop loss or a take profit order, but you can't have both, which, that was fixed in like the 1990s on real exchanges, So in theory, you should be able to set a stop loss, but also have your profit orders. And this is why the 24/7 thing kills people and they watch their trades all the time, because on most exchanges, unless you use a third party like 3 commas or super order, which do allow you to do that through API. I mean, you really can't have both. So either you're gonna lose money when it goes down, or you're gonna miss that quick opportunity to sell, because in crypto, you know, the market moves 10 times faster than everywhere else. It can go up 10x and be back down by the time you woke up and you missed your chance to sell. So I think that that's when risk management becomes extremely essential, because we don't have the tools to do it properly. So I think that you have to basically weight it towards your stop loss. You have to avoid the loss more than worry about the gain. So that's where the thing like don't risk more than 1% of your portfolio on a trade, maybe 1 to 2%. Those classic rules definitely come into play, especially on an individual trade. And that should be the case if you have $100 million or $100. If you have $100 to invest in crypto, you should not be losing more than $1 on a trade. I know that sounds insane, because you're never going to get rich doing that, but that's the reality of it. You need to go get money somewhere else to be able to trade this market and make money. It's just the way it is. So, I mean, I think that that's a big problem, is that we can't sort of have it both ways, have the orders that we need to really be able to manage risk properly. I think that unless you've been trading for minimum of 10 years, you should never, never, never trade with leverage. I think that the worst thing that ever happened to this market are exchanges like BitMEX, where it just made it easier and easier for, you know, incompetent or, you know, undereducated investors to go and quickly lose all of their money. On an exchange that's not even regulated, I mean, they can literally just steal your money, close your account, erase your, they can erase a stop loss order and just pretend it didn't happen, and you have no recourse and you get liquidated. So I think avoiding, I don't trade Bitcoin with leverage at all. I have, but I don't trust any of the exchanges. I'm an American, so it's effectively illegal for an American anyways, which means you're taking the added layer of risk of using a VPN and pretending that you're in another country. I know everybody does it, but that does not fit. I'm extremely risk averse. That does not fit my risk management profile, because it puts too many factors into the unknown that I can't control. I mean, at the end of the day, you want to be able to control every part of your risk. And if you're relinquishing any of that control to the exchange or to, you know, other market conditions, then you really are not practicing risk management. So for me, I'll trade Forex with leverage on a reliable platform, because you need the leverage to, you know, to make the volatility enough to actually make money. But I don't trade with leverage in the stock market or in crypto. I think Warren Buffett had a famous quote from his partner who said that there's 3 ways that a rich man becomes broke, and it was the ladies, liquor, and leverage. And then he said, and I only added the first 2 because they had L's, so it's really leverage. And that's the reality. So I think, you know, if anyone's listening and they're brand new, all I can say is don't even think about it. Don't touch it. Don't consider it. Doesn't matter what you see people doing on Twitter, or if you're in a group and they're telling you, you know, scalping, you're going to lose everything. And then you're going to reload and you're going to lose it all again.
I think the main problem with many of the riskiest investments is that people just pretend to know and they just trade, but without the proper education and without the proper knowledge of how to do it. So it's very, very likely that it will get liquidated. So I think that it's all about education and setting properly your risks and sticking to your strategies. It's like you said before, it's like you should find a strategy that allows you to sleep well and without worrying anything, because especially in crypto, being a 24/7 market, I mean, you should have your risks very, very tight, you know. It's like, I think, I agree with you, it's risky, but at the same time, if you have the proper knowledge and proper education and you have experience, maybe you can use it, but of course, carefully.
It's a great tool for extremely advanced traders in general, but like I said, in crypto, I'm confident enough in my trading to use leverage in a vacuum. Like if the exchange was perfect and it was totally legal in the United States and I could trust it, I have no problem using leverage. Personally, I didn't feel that way for a very long time, but it's just a guaranteed way to lose everything before you even have a chance to learn. You should not be using your money that you need to learn a lesson. That's like the old jokes. Everyone's like, well, I just view it as like my education. No, you can get educated without spending your money. You can go paper trade. You can trade on the test nets. You can see how you would have done. You can quantify your performance. You can keep a journal, a running list of what your emotions were at this time and this time. Why did I take this trade? Why did I exit this trade? Why didn't I let it run as far as I should have? Why did I panic and sell it too early? You know, there's a million things you should know and understand about yourself before you ever put your real money at risk. I'm not even talking about investing, but, and I should talk about, I mean, you asked the question earlier, what kind of trader am I? The thing I preach the most, and that I believe for everyone in this market and every other market, is that the market will probably beat you. You probably are not smarter than everyone else in reality, so you should just dollar cost average. If you believe that something will trend up over time, and you have to have a lot of time, you should just buy it blindly on a regularly scheduled, basis and not think about it. That's what I've done. I've been buying the SPY, which is, tracks the S&P, since 2006, every month for my retirement on the first of the month. I don't even look, it's automated. So I did that all through the recession. So I was like insanely underwater for like 5 or 6 years. I was buying, it was going down, down, down. But as a result, I bought every one of those dips, and at the lowest price, it hit an all-time high this month. So every buy I've made since 2006, even buying the top, is in profit for 13 years. And if you had done that with Bitcoin at any point, you've barely even bought the top in Bitcoin. Bitcoin's only been over $10,000 for a few weeks total. In the entire time that Bitcoin has existed, you've almost I haven't done the math, but probably 95% of the time you would have bought cheaper than the price is now. I buy Bitcoin every single day. In tiny, tiny increments, I have it on it, but I buy Bitcoin literally every single day as part of my strategy. I don't care what the price is. I don't really and most of my trading is also kind of based on thinking about averaging in, buying dips. I mean, even if you consider the Great Depression and the stock market recessions in the 80s and in the late 2008, 2009, if you look at the Dow Jones in history, it just goes like this. If you zoom out enough, it never has gone down. There's never been a time that shorting the stock market has been a good idea for more than a very brief period, and you'd have to be extremely excellent trader to be able to time that moment. So if we all believe that Bitcoin is the future and it's going to be $100,000 someday, does it matter if you buy it at 10,000 or 9,000 or 8,000 or 12,000? Just buy it. Take the money that you have and you can afford to lose in theory and just start buying. Don't even look at a chart. People have been making billions and billions of dollars in investing forever, and most of them have never looked at a chart and don't know what technical analysis is. Period. They don't even know what it is. Even traders, there are traders I've known, especially in the 90s early, they didn't do that. They studied the fundamentals of a company. Then earnings call coming. They thought, hey, they'll perform well in earnings. I'm going to buy this stock. Earnings do well. Stock goes up. They sell it. In other markets, technical analysis is not quite as useful because there's true fundamentals. You can know about a company. You can understand what products they have. That's all out the window in crypto. I mean, here you look at a chart, you're trying to figure out who's going to pump and dump and which side of that you're going to be on at the end of the day, And so, I think it's a very, very scary market for beginners. And sadly, they all think that this is the easiest market to trade when you start. Because you can go on Twitter and you can have someone tell you what to do and you can learn whatever. I think something you and I discussed before this call actually casually was, I guess it's analysis paralysis. We have so much information, which you would think would be of great value because you can learn everything you need to know on YouTube. But at the end of the day, 99% of the information is terrible. And if you're a beginner, how do you choose the 1% of information that's actually valuable and is going to help you? So you're more than likely to be inundated with bad information than somehow stumble luckily upon the good information.
Yeah, you should have the tools to differentiate what is, trash and what is the good advice. But for that, I guess that you need more than just reading tweets and articles in internet.
Yeah, good way to lose all your money.
And speaking about that, Scott, I know, and this is the final question, I know that you have this trading service called Texas West Capital. So can you give us an overview of what is it and how, for example, a newbie can benefit from this trading service?
Sure. Well, I can tell you this. When I was first in crypto, I met my partner, Chris, who's the boss, Christopher Inks, Texas West Capital. I stumbled on him on Twitter. We became friends. We shared a lot of trading ideas and stuff, and he started a little service that was just basically like sharing charts and stuff, and I was a part of it. And I really viewed him as the best, in all my years, he's the best trader I've ever met. Like the most common sense, simple setups. All he talks about is risk, sort of the same things that I preach. We just really are very synergistic in the way that we approach trading. And so I convinced him that he had to do something bigger to counteract all of the bad information. So that's why both of us, we have our names and faces on our Twitter profiles. We're not anonymous. We're accountable. People are just throwing their money. Like you see a picture of a unicorn avatar and you're like, this person's an expert. That person could be 14 years old and living in their mom's basement and has a unicorn avatar and is telling you what to do with your money. It's like, it would be like trusting a first-year medical student to do brain surgery. Would you do that? No. So why would you just follow an anonymous person on the internet for financial advice? So I basically was like, everybody's out here losing money. They're getting destroyed. The information's bad. We have to fight that. So I guess it goes back to the old adage, if you're the smartest person in the room, then you're in the wrong room. So I always viewed Chris as a better and smarter trader than me. So I wanted to, join forces with him and learn more. You can always learn more, and to help him do this. So our goal was basically to be ourselves, not be anonymous, and create a service. He created a full, it's effectively a college level course on trading. It shows you how to, use every kind of indicator, patterns, all those things, but really still is primarily focused on managing risk. And basically how to approach the markets in general, the psychology of it, and how to detach yourself emotionally, all the things that we've discussed. And then from there, I convinced him that he had to start a Discord because it's highly in fashion for crypto Twitter, have a Discord. So that's where we sort of interact on a daily, hourly, minutely basis with our students and our members. And so it's basically this course, which, we encourage people to go through the entire course first, and then we'll sort of put it into practice, because we don't believe that anybody should actually be trading their money until whether it's his course or YouTube or whatever it is, until they've learned the basics and have an idea of what they're going to do. Like I've said, you shouldn't be throwing any real money into the market. And then that's where we discuss specific setups. Everything from Forex, stocks, crypto. We have discussion channels for all of the different large caps, all of his setups again. And, we really cover everything there is to know about investing and trading. And at the end of the day, I think the value is that, I think that we're reliable and we truly care about our members. We really want them to make money, or I should even specify, we really want them not to lose money, because that's more important to us than them necessarily making it. If you go through a whole year and you break even, you're doing pretty good as a trader versus, like I said, the statistics of most traders. So, and I think that, it's just great information. He is an absolute master. He's been trading these markets for over 20 years, and he's made a living doing just that for all of this time. I don't think there's anything else you can prove as a trader than actually, and he has children and family, and he sustains them by trading. And so, to me, the value of the service was really trying to bring him to the forefront as much as possible, much more so than myself.
Great. So it's very interesting service. As we spoke before, education in this field, it's like, I think that the main and the most important thing and the first thing that you should achieve, instead of just looking through Twitter and Medium, Reddit, etc., and it's great. I find really great that you show your faces, because as you said, many people, they're just, they just wear a hat and glasses and everything, and you don't know who is behind all this, and you're just following the advice of someone who you really don't know.
Right. I mean, some of those people are very smart and they know what they're doing. It's just how do you choose and how do you know? I mean, that sort of evolved in this community as a result of fear of hacking and security, and this is the 4chan Reddit community here. They're very tech savvy, so I think they initially hid their faces because, well, if you're talking about money and you're not anonymous, somebody is going to come try to get your money, right?
Yeah.
But I mean, for me, there's people much wealthier than me who are very publicly out there and have never had a problem with people knowing how much money they have. I don't worry about it because I think it's much more important to have the credibility that comes with being yourself. But I do understand it. The problem is that means all of the scammers can use that to look as credible as the ones who actually are credible. So again, it's just maybe you luck into finding the right person who can be a great mentor and a great teacher, and that person happens to be anonymous, and that's terrific. But the odds of that happening are extremely low.
Yeah. So it was really, really interesting speaking with you today, Scott. So thank you so much for being in this edition of The Trader's Perspective. And thank you everybody who attended today. So remember, if you enjoyed this video, please like and subscribe our channel, where we are going to post more videos. Yeah, down here. So that's all for today. Thank you very much, Scott, again.
Thank you so much.
We will be putting all the links of Scott's social media and also his trading service in the description of this video. And also you will find our social media where you can keep up to date with the latest BBOD developments. So thank you again. It was a pleasure today.
Pleasure was mine. Thank you very much.
Thank you. And see you in the next BBOD talk. Thank you.
Bye.
Bye-bye.